let's take a look at your market news now. Asian markets mostly fell. This is as investors weighed on President Donald Trump's escalatory rhetoric on tariffs and assessed his move to fire Federal Reserve Governor Lisa Cook. Investors also assessed the meeting between South Korea and the U.S. presidents over fleshing out the trade deal announced last month that stipulated 15% tariffs on the Asian countries' exports to the U.S. The Hong Kong Hang Seng Index led losses in the region, shared 1.8%. The Nikkei 225 declined 0.9%, while the Shanghai Composite Index dipped to 0.39%. And when we speak to a market commentator a little later on, we'll find out, about those developments with Lisa Cook and the independence of the reserve banks and Federal Reserves in this case. But taking a look at our U.S. markets now, the S&P 500 ended lower on Monday. This is as investors looked ahead to AI chip maker NVIDIA's quarterly earnings on Wednesday. This is while digesting a rally on Friday that lifted the Dow Jones Industrial Average to a record high close. Last week on Friday, stocks jumped after U.S. Federal Reserve Chair Jerome Powell hinted at the Jackson Hole Symposium that an interest rate cut could be considered at the central bank's September meeting, citing recent labor market as well as weakness. So the S&P at this hour, 500 lost 0.4%. The Nasdaq Composite lost 0.2%, and the Dow Jones Industrial Average has gone down 0.7% to 45,282.47. Here at home, taking a look at the All-Share Index is currently down at 0.6%. It's now trading at 102,389. And when we look at our currencies for this hour, the rand is trading at 17 rands 63 against the US dollar, as you can see on the graphic there. 20 rands 53 to the euro, and it's at 23 rands 73 rands 73 cents, I beg your pardon, against the pound. Let's take a look at your commodities this lunch hour. Gold is trading at $3,371 an ounce, while platinum is at $1,337 an ounce, and Brent crude is currently trading at $67.25 per barrel. All right, Martin Smith, who is no stranger to SABC Markets, is a portfolio manager at Anchor Capital, and he's our market analyst for today. Martin, always a great pleasure speaking to you, and welcome to Business on Point. Before we even go far in looking at generally what's moving the markets, I was just telling the viewers there about that firing of Lisa Cook by U.S. President Donald Trump, and what that means, about the attack, particularly on central banks. And I'm so keen to hear your views first.
Yeah, absolutely. So, I mean, it's very interesting, especially in the context of talk around Jerome Powell and how long he'll be there, and the independence versus the presidency, and all of those questions. But look, for now, it seems like the independence is still there. What Donald Trump has spoken about, or potentially might do, is announce a successor to Jerome Powell a little earlier than kind of what is usually the case, which can then kind of change the market's view of what Powell does and what the kind of incoming person will do. So there's a few kind of games afoot, but I think the independence is the main thing, because if that link is broken, then I think it's bigger questions being asked. But I think the story around the Fed and their view on interest rates versus the president's view on interest rates, I think is one that'll continue to rumble along for the next few months until Powell's term is finished. Yeah, absolutely. While we are still there, how do you see the markets, and what are they reacting to today on this Tuesday? So markets are a little softer at the moment. I think you saw a nice pickup on the back of some comments out of Jackson Hole and potential rate cuts coming through specifically in September. I think the market's maybe kind of reversing a little bit back on that. And I think there's still a little bit of nervousness and worry maybe around inflation and tariffs and how that impacts kind of the second half of the year, and obviously how that impacts the interest rates decisions that kind of come forward. So markets kind of moving back on the position that it had on Friday when it got a little bit excited, and now you're seeing a little bit of cautiousness because valuations are still slightly elevated. And the other thing, like you mentioned, you've got NVIDIA's results tomorrow, which is a very, very big driver of what markets will do from a directional sense. So I think markets also maybe just taking a little bit of a breath in before we get those quarterly numbers.
Yeah, I wonder if, speaking about NVIDIA, we might see sometime in the future it hitting that 4 trillion rand market capitalization that we saw a while back, and what that would mean for the AI sector. But to this now, back looking at how those commodity prices have now boosted Master Drill results. They released their results this morning. The South Africa operations headline earnings gone up 4.7% to 176, that's 176 cents. What do you make of Master Drill's results?
So you're 100% right, very much exposed to kind of the commodity sector, specifically gold and copper are the kind of two main resources that it's exposed to. But look, it's always going to be a cyclical kind of affair for businesses like this. And I think, like you mentioned, a decent set of results, but I think a bit mixed if you look at it kind of across the segments. Share price up a little bit, although the share's a little bit illiquid, so it's sometimes a little bit difficult to read into that too much. But yeah, I would say largely okay and decent given where they're exposed to, but I think a little bit mixed across the different sections, if that makes sense.
Yeah. Martin, I get excited when we speak about companies that our viewers in particular may be familiar with and sometimes could even be customers of Old Mutual. They issued their trading statement this morning and they're expecting growth results of between 6 and 26% from operations. What strategy do you think Old Mutual Insure is pioneering that seeing results, moving towards this growth?
Yeah, so like you mentioned, a very good set of numbers. I mean, it's very much in the share price, up 7.5% as we speak, and up very nicely for the year as well. So very good to be an Old Mutual shareholder, and these results have been very good. Like you mentioned, the Insure business has done exceptionally well, but not just that. I mean, it's also a business that's highly geared to kind of global markets. So as markets have gone up, specifically on the JSE side of things, that's also been geared nicely into their results. They've also benefited from a JSE that's done very, very well. So you've had the Insure business doing exceptionally well, and you've also had a kind of geared play on the JSE also kind of playing out. So it's been very good for them across the board. Look, they do report results, I think it's in 2 weeks, on the 10th of September or so. We'll have a bit more information around kind of the position of the business and a little bit more detail into why, like you mentioned, the Insure business did so well. But overall, very good set of numbers. Yeah,
Cashbuild as well, also expecting between 7 and 12%, an indication of perhaps consumers undertaking household and building projects, you think?
Yeah, I think potentially. I mean, it's very much geared to the SA consumer and the SA economy. And I mean, it's no secret that we're under a little bit of pressure. So it's nice to see these types of results come through. It just shows at least some growth is kind of materializing. Look, the market probably wasn't terribly excited by these set of numbers. Share price is still off about 30% kind of year to date. Share price up about 1% or 2% on the back of this trading statement. But look, also there wasn't a lot of detail in this update today. And we get these results next week, Wednesday. So we'll also, same as Old Mutual, we'll get a bit more kind of detail next week when we see the proper results and can really drill down into the detail. Yeah.
While I still have you here, what are your predictions for the producer price inflation tomorrow when it comes out? SABC releases that tomorrow. Any thoughts, anything that you have jotted down as Anchor Capital about what to expect?
Look, I think our view in general around inflation in South Africa is that you are seeing a slow tick up, and we did see these last numbers, and we're obviously trying to hover around this kind of 3%. But the things that can kind of creep in is, one is the effects of these tariffs from global markets, because we still don't know how it's going to fully affect things. I mean, even the CEO of Walmart was making reference to it last week, saying, listen, we aren't quite sure about what these tariffs are going to do from an inflationary perspective globally, and that's a big global giant, obviously. And I think it's South Africa that holds true as well. But also the big foot and mouth disease kind of pandemic that we've seen as well is also playing a huge kind of role in pushing up meat prices in South Africa, which is very, very inflationary. So we think that there might be a little bit of inflation creeping back in general. Whether that leads to less rate cuts or not, obviously we'll wait and see. But a lot of it is wait and see for now. But it's at least looking a little bit better from a rate cutting perspective.
Martin, thank you so much. You always dissect these markets so well for us. Appreciate it. Martin Smith is with Anchor Capital, and he's been a market commentator for today.